It's showtime. Good morning and welcome, traders, and good morning, Greg. How you doing today, sir?
I'm really good. How are you doing, Ben?
Excellent, thank you. So I see that you've got your weekly options webinar slide. I know it's been a crazy start to the year. What have you got for us today? What's our agenda, Greg?
Okay, well, today we're going to talk a little bit about earnings season coming up and what the Fed is up to. And then I'm just going to review a strategy that works well for earnings season.
Okay.
So that's what I'm going to talk about. So you ready to turn it over to me?
Let's kick it off. I'm gonna make you full screen and
Please do.
you can have it.
Okay. Good morning, everyone. Thanks for being with us. Hope you're enjoying the new year. Okay, let's talk about what's going on in the world today. Okay, first off, earnings season is coming up. It begins January 19th, traditionally with Alcoa. Normally is the first company to announce its earnings. I would encourage you, like I've shown you before, to use Yahoo Finance or any other site you can find. Make sure that you know when earnings are coming up. Excuse me. Because when a company announces earnings, of course, that can greatly affect your stock trades or your options trades. An announcement can really send the stock going in your direction or against you, where an otherwise profitable trade suddenly is a big loser. And so, generally, to lower risk and limit risk, we encourage not to be in a trade over an earnings announcement, unless you've deliberately chosen to do that. Now, we'll talk briefly about that. What you might want to do, what some riskier traders like to do, is to do trades before earnings with the expectation that they're going to have better than expected earnings because they have for the last two or three earnings announcements. Some traders like to play that game. Personally, I don't do that very much because it's increased risk. If you're wrong, you're going to take a big hit. And if the announcement is not a lot better than expected or in the direction that you were planning, then you can lose money that way too, at least with options. And so, just in general, I'd encourage you to stay out of a trade during earnings announcements and be aware of when earnings are going to be announced. Here in Yahoo Finance, you click on earnings and you can type in any stock right here, and it'll tell you when earnings are going to come out. So Alcoa starts earnings a week from today. Let's check on Rivian. Doesn't say. Okay, Rivian's a new stock, so I guess they haven't put that in. Let's just put in something else. Okay, Target. Target's going to announce earnings on February 28th. So that gives you an idea what trades you can enter that'll end before the earnings announcement comes out. Okay. So just be aware of that. That's something you want to do to make sure you're in control of the amount of risk you want to take. Now, let's talk about the Federal Reserve. What's going on? Federal Reserve Chairman Jerome Powell recently said that the Fed will act, if needed, to control rising prices. My gosh, that's a really dovish thing to say, honestly, because prices are really high and out of control right now, and they're saying they will act if needed. That's a signal to Wall Street that they're saying they're going to raise interest rates, but they're going to be really hesitant to do so, because if they raise rates too quickly, it's going to put a damper on the economy and the stock market. Okay, the more they raise interest rates, the more it'll slow down the economy and stock prices will fall. And if they do it too fast, they could fall hard. So we gotta watch how this plays out and how much they raise rates. Now, this might just be lip service, okay? Inflation is very unpopular politically, and so the Biden administration must be under a lot of pressure to take control of that. But at the same time, they know full well that if they raise interest rates too fast, it's going to take a hit on the economy and the stock market. So they're really in a difficult position right now. If the Fed raises interest rates too high or too fast, it'll lower inflation. That's a good thing, but it slows the economy down too much, and that means lower stock prices. So really what they're doing is they're trying to walk a very careful tightrope. And, when they do these things, whenever they make a move, it takes months for it to show how strong the effect was in the economy. And so whatever they do, it's not going to show up for 2 or 3, 4 months unless they do it in an extreme way. So they're really in a tough spot right now. I'm not sure how this is going to play out. I really do think it is lip service, though, because while they need to lower inflation slowly, they really don't want to put a damper on the economy too much or on the stock market. This is how I view the situation that they're in right now. Look at that picture. Oh my gosh. It looks like I get queasy just looking at this picture. I'm not afraid of heights, but I would never do that. That's insane. So this is the position that Jerome Powell and the Fed is in right now. And we just need to watch closely, see how that plays out. Gary Kaltbaum, the radio announcer that I've talked about, he has said many times that the Fed will say one thing but actually do another. They'll say that they're going to stop stimulating the economy, but then they don't actually do that, or they only do it just a tiny bit to lower QE. So that's kind of what's going on right now. I'm not sure how this is going to play out, but we do need to watch carefully, see what happens. Okay, let's talk about the breakout strategy. And it works great during earnings season, when a company announces much better than expected earnings, what that means is the stock price is suddenly out of line with where it should be, with where the stock was expected to be based on their earnings. So if you get a big earnings surprise, in this case, this was Disney. You get an earnings surprise that was not good. It was to the downside. Look at that first arrow, what happened. The stock gapped down, and I saw that, and you never know when it gaps if it's going to gap down too far or not far enough. So when these earnings announcements surprises come, and they're a big surprise, you got to see where it trends after the announcement. It's not what the news is, it's how the market reacts to the news. Okay. And so we want to tag along to any trend that happens after a surprise earnings announcement. So in this case, we actually did this trade, by the way, if you recall. We entered a short position on Disney the day after that first arrow. And we did that because about a half hour to an hour into trading, I saw that the stock was trending down. It actually gapped up a tiny bit because they like to give themselves higher prices at the open, knowing that they're going to sell it off all day. And that's exactly what they did. So when it was trending steadily down, I jumped all over that. And you can see that in the 2 weeks following, that the stock trended lower. And so it was kind of a no-brainer trade. Looking back, it was a no-brainer. At the time, it's always nerve-wracking because you never know for sure if it's going to continue trending down. But that's what happened. Now, I want to show you something on this chart here. On the first arrow, the down arrow day that I put up there for you, there's two things you want to look for. You want to see a big red candle or a gap, a big change in price on heavy volume. Look at the volume bar below that candle. It's huge. It's 4 or 5 times normal volume, maybe more. So that tells you that the big money on Wall Street is selling off Disney in droves at these prices. Okay. Excuse me. And so that's an indication that it's more likely than not to follow through to the downside. Okay. That's what gives us a huge clue that it's going to continue trending down. And you see heavy volume, heavier than normal volume in the few days following as well. So that's a real good indication we're moving in the right direction. And it's going to continue. Now, I want to show you something else. Look about 2 weeks later at the second down arrow there. Once again, you see a great big red candle, and it's a little heavier than normal volume. Excuse me. I'm going to take a drink. Okay. So you'll notice that in this case shows the end of the trend. A big extreme candle after a big trend often shows it's the end of the trend. So just be aware of that. These big candles on heavier than normal volume tend to start and end trends. Not always, of course, but that's something to look for. Okay. And you can go back and look on just about any stock chart, and you can see this. It happens all the time. Okay. So this strategy works big candles on heavy volume up or down. Okay. So you can just as easily make money on the upside as on the downside this earnings season. Okay. I love this. This is one of my favorite strategies. You just have to be careful. If the stock starts to trend in the wrong direction, in the unanticipated direction that you don't want, you got to get out quickly. For example, at the first arrow, if Disney gapped down, I waited till the next day to see if it was going to trend down. It actually gapped up a little bit at the open. I was watching it very carefully at that point. It actually probably trended up for a few minutes, maybe a half hour. So I was starting to get nervous, see if it was going to trend up from there, but it reversed and went back down. Okay. So we have to be careful and watch carefully. If this stock went above the high of the previous day, which it never did, that's a pretty good sign it's trending in the wrong direction. You got to get out and might even consider reversing your course. If you did a short position there, you'd do a long position if it's trending up from there. But based on the poor earnings announcement and the high valuations on the stock, it was a pretty safe bet it was going to trend down from there. Okay. I don't do all these trades only on technical analysis. I kind of like to know what the background information is on the trade because this is news based. Okay. This is based on an earnings announcement or some other news. So I want to know what the news is. So just be aware of that stocks tend to start trends or end trends with a big candle in this way. Okay, let's look at some different stocks that have done this. Okay, let me pull up some different stocks for you to look at. So we're going to Twitter, and we're going to go back to October 27, which is towards the middle of the chart there. Previous to October 27, let me pull it down so you can see the date there. Okay. Previous to October 27th, the stock had been mainly going sideways. So the trend up to that point was sideways. Then you have a big down candle on heavy volume, which was probably an earnings announcement based on the time frame there. October is earnings season. So the big candle happened, and you could take a short position and you would have made a little money over the next 2 weeks, but it took about a week and a half, 2 weeks before big downtrend started to follow through. We would have made money if we had waited and held on until around at least November 22nd, if not into December. We would have made more money. Okay. So this is a really good entry point for buying debit spreads, buying puts and calls outright sometimes. And so this is an awesome indicator here. Let's look at another one. Look at Tesla. We did this trade. This was back on October 25th. Big up candle on about 2 or 3 times heavy volume. And guess what? It followed through quite a bit for another 2 weeks. And then it fell back a little bit. So you got to be able to pull the trigger with your profits if you're doing options or stocks. Okay. Like I said, these tend to follow through, but not always. Let's look at another one. Let's look at Hilton. Hilton Hotels. Okay, let's look at December 21st. So let me go down here and move it over. There we go. December 21st. You can see that great big up candle on a little bit heavier volume. That's good enough on December. Looks like it was actually December 21st or 22nd there. But a big up candle. It followed through for at least a week. And then if you didn't get out, then it pulled back. You would have given back some of your profits. But it's a really good indicator for short-term trading. I found that the majority of the time when you see a big candle on high volume, it'll continue and follow through up or down in whatever direction. Let me show you something else on November 5th, going back on Hilton. You get a gap up on November 5th, that black candle there, and it gapped up, but then it immediately showed signs of weakness, like the sellers were jumping in. So that's an indication where it did not follow through. And in fact, a nice reversal trade would have been perfect there. You want to see where it's trending after the initial move. Okay. You can also see on that, looks like first day of December, another example of a big candle ending a trend, ending the downtrend. It had climbed up to that high on November 5th and 6th, and then it trended down into December 1st, where it reversed. Okay, so we just need to, watch for these different signals for what the stock is doing after we enter the trade. And, I love earnings season because there's tons of opportunities like this. You just have to spend time searching for them. So you watch the news, you can find scanners online and on your brokerage account in your company usually offer scanners that will let you do gaps, find gaps or heavy volume. If not, there's actually another way to do it. I'll show it to you right now. barchart.com has a spot where it finds for free gap ups and gap downs, which are right here on the left. I hope you can see that. Or on the left, you can also go to volume. And the one you want to look for is volume advances. So let's click on that for a second. This is free. You don't have to pay for this. I love it. Don't do penny stocks. There's a lot of penny stock stuff. They trade like this one right here, MBAC. It's a $9 stock. It had 3 times volume, 200% increase in volume, and it's only 800,000 shares. That's too low. Don't do that. Click on volume. Only do trades with stocks over 1 million shares is my rule. Okay, so if you see a big move on heavy volume, like maybe 5% increase in volume, that's not enough. I want to see at least 50% increase in volume. Not the small. Okay, these are all low price stocks. So the only one I might consider is VNet, whatever that is. Okay, this is just a free way to find these kinds of trades, and I love it. Okay, let's spend some time now looking at our stocks that we've been trading. When I start making money on a stock, I tend to go back to it. And Rivian, we recently traded Rivian and made money on it. It's bouncing right now. in general, stocks, when they have a move, tend to retrace about 50%. Okay, so the stock was up around 106 and it fell to about 77, I'll call it 78. So that's almost a $30 move right there. So you got to expect, even if the downtrend continues, that it's going to bounce at some point. And we would expect it to bounce roughly 50%, more or less. So I would expect this stock to bounce up about 15 bucks a share from where it did. So that puts it around 92-ish. This is not an exact point. This is a very general area. So I want to see how far this stock bounces. If it bounces all the way up to 106, well, then that's just kind of a sign of strength that it's the main direction would be sideways or even up. However, if the stock goes up from the low 50% of the move, around 90, what did I say, 92 to 95, and then starts to roll over, starts to go sideways, the upward bounce momentum starts to fade and go sideways and start to curl back down. There's your entry point for a safe entry point. Okay, so let's say, well, look back at Rivian back in December. The stock had a big down move after the first week of trading. It went down and then it went sideways for a few weeks. It tried to do another down move, those 3 candles in a row, and then it bounced up again. But every time it bounces up, just up to where it had been, it starts to fall apart again. It's a really good signal that this is a weak stock. Every time it bounces back up, they slam it back down. Kind of like that old game, Whack-A-Mole. Remember that game, a video game or mechanical?
Oh yeah, I remember it.
Things would pop up and you whack them. Anyway, whatever.
So they had production issues, right? That came out and slammed that stock.
I think this was earnings. That in December, that was earnings.
Oh no, I'm talking about the drop. Was it last week?
Oh yes, I have heard that they have production problems. So all I know is ultimately they don't have much sales. They've only made a few cars, and they're losing money. So this is a stock that's still based on hope and hype. This stock still looks like it has plenty of room to go down. I'm just waiting for the next entry point for the next down move. Okay. If it doesn't come, I won't enter, but this is what I think is going on. Got a request for Citi. Let's look at Citi real quick. Financials have been strong lately.
Definitely.
So almost all of the financial stocks have been really strong. The reason for that is when the Fed raises interest rates, they can loan money out and make more money on it and not have to pay much to the people who deposit the money to them. So in general, banks are doing really well right now. So this is all uptrend. Where would be the right place to have entered on this stock? Well, it should have been January 1st because that's the big up candle on high volume. And you see right there, it followed through also. Do I want to buy it right here? No. It's as a short-term trader, no, it's too far into the move to do the trade. Now, I don't know, as far as a long-term investment, maybe it would be a good spot, but we're not talking about that. We're talking about short-term trading. Okay, if you bought Citi and you're into it as a short-term trader, what you want to look at is momentum slowing down, and I don't see it yet. Okay, it's still climbing at a very nice pace. How much further does it have to go? I have no idea, honestly, but it's still going up. And so one of the big sins is getting out of a trade that would have been awesome if you had held on. So who knows how much further it could go. When it starts to go down, a telltale sign would be if you have a candle that's lower than the previous day. I'm not seeing any of that yet. Having said that, at any point you sell, it looks like you made a nice profit. So good trade. Okay. Earnings on Citi. Let's see when there announces earnings. Looks like Citigroup is going to announce their earnings in 2 days. Is that right? Yeah. So be careful with that. I have no idea where it's going to go from there. Okay, let's go back. Let's look at a couple other stocks real quick that we've been trading. Let's look at Snap. Remember, don't just look at what's going on. The most important thing to look at is the trend. Oh, well, if you're asking about Citi, when to exit the trade, if you're in it, just personally, I would get out. I would get out because you're taking on extra risk if you hold it during earnings announcement. It may go way up, or it may go way down, or it may about be where it's expected. It might just sit there. Yeah, it's all bets are off once they announce earnings. You have no idea. So if you have a nice profit in the trade, it's up to you on if you want to hold it through earnings. I have no idea. Okay, you're welcome. All right, so let's go back to Snap, and I will get to Home Depot here in a minute, Frank. The trend is still definitely down on Snapchat. It keeps bouncing up after a down move. It keeps bouncing about, like I said, about half of the down move. In the previous down move, it recovered about half of the down move and then did another further down move. Okay, maybe that didn't make sense. Just know it's doing lower highs and lower lows. So right now, over the last 3 days, Snapchat is trending up. It's going up. I would expect it to top out maybe around 44 to 46, and then start to lose momentum, start to come back down. You notice in previous, throughout this trend over the last month or two, it'll go up for a few days, 3 or 4 days, 5 days, and then start to trend down again. That means our entry point on Snapchat is probably going to be within the next few days, maybe before the end of the week. So this is, I mean, it's not showing a whole lot of strength gapping up from here. This is just a bounce. I would expect the downtrend to continue on this. So let's go in order on this. Let's look at Home Depot. Okay. Interesting. Home Depot had been very strong, and it had been trading above the 50-day moving average, which is the one line I look at. That's the line in the middle of the chart there. Recently, it went below 50-day moving average. I want to see if it can climb back above it. I would expect it would because it's been so strong. If it doesn't do that, that is a very bearish sign. And I would start to consider maybe a short position in Home Depot. My general rule is I don't want to buy anything that's below the 50-day moving average in general. Okay. Furthermore, if you do buy it here, let's say I bought it right here at 392.50. It might go up to the previous resistance level around 417. So that gives you a little room to work with. Does it make sense to buy it in terms of risk versus reward? Does it make sense to buy a stock here knowing it could go up to 417? Well, it depends on your risk. If it goes down to where we would get out around 387, below the low of today, that's trending in the wrong direction. So we'd be risking about $6 a share, $5 a share to make 8 plus 17 is 20, what, $25, $24 a share. Is that a good risk versus reward? Yeah, it is. So for a short-term trader, I would consider buying it right here and hoping it to get back up to resistance. Again, it makes me a little nervous. It's below the 50-day, but this wouldn't be a bad trade to do on the long side right here. Okay, let's look at Coinbase. What's the overall trend on Coinbase? Down, definitely down. It's below the 50-day, and it's been trending down for a couple months now. Every time it goes up for a few days, they smack it right back down, which they've been doing for over a month, almost 2 months. Okay, so it's bounced up a little bit for the past 3 days. It might be starting to turn over right now. Going to watch carefully on that. I don't see it yet. I want to see the stock show me what direction it's going to go. So I want to see it start to roll over, go to a low of the previous day and trend below that. So for today, if it starts to trend below the low of today, I'd probably consider shorting it right there. Until then, it's showing uptrend the last few days. Okay, this helps you pinpoint your entry points. It's not always right, nothing's perfect, but it's a good place to enter. Okay, let's look at COP. ConocoPhillips, oil stock. Oils are really strong. The entry point on this would have been about a week ago. It's too late to enter. Same thing on the exit. If you're in this, wait for the momentum to slow down and then exit. The fundamentals are really strong for commodity stocks. So this is actually a trade that might run and continue running up for a little while. So don't be too quick to exit this position if you're in it. Would I enter it right here though? Nope, I sure wouldn't. It's too late. Look at Micron. Semiconductors have also been very strong lately. Okay, this is not an entry point right here. The entry point would have been the gap up a week, 2 weeks ago. It looks like the move might be over, at least for right now. It could do anything from this point. It could go sideways for a month. It could go start a new trend up. It could trend down from here. I don't know. And I'm not clear what the stock is telling me at this point. So far, not entering the trade right here. I definitely would be exiting the trade if I had a profit on it right here. Option trade with Tesla. Let's look at Tesla. I like Tesla, but the options tend to be expensive, and but it's a volatile stock. You can certainly make money on Tesla. Okay, look at resistance over the last couple of months, which is all we're showing on the chart right here. There's resistance level. The main resistance is the first high at 1243 towards the left of the chart. Every time it's even come close up to that, it's bounced off it. Bounced off it about a week ago at a lower level, 1208. Okay. So overall, this stock is trading sideways. It's been in an uptrend, but it's been long term. But it's been going sideways within a range over the past 2 months, with a low of around 886 and the high of 1243. Right now, it's in the middle of that range. I don't know where it's going to go from here. I want it to go to the top of that range and bounce off it, start to come back down to take a short position, or I want to see it go all the way down to support around 890 and then trend back up. Right now, it's chopping around in the middle. We want to catch big trends. We want to catch big moves in the stock that's going to follow through in one direction. And I don't see that right now with Tesla. It could happen at any time, really, but anyway. So that's what's going on. ON, do one more. On semiconductor, again, the semis are strong. Well, it's definitely in an uptrend. It would be easy to see looking back where the entry point on this would have been a beautiful entry point. People get scared, like on the first day of November. People, including me sometimes, get scared when a stock does a big gap up on volume. And that's a pretty big gap up. Let's see, it went from about 48 and gapped up to about 52. That's not too big, actually. That's not too bad. And so if I didn't buy it on day one of the gap, I would have bought it the next day. And if I had bought it the next day, it would have been around $57 a share. It's currently trading at $67 a share. So could have easily made a good profit on this. You see how these tend to follow through in the direction? Not always, but usually they do. So this is awesome. This is a great way to make money during earnings season. As far as the trade on it right now, it looks like it's kind of chopping around in a more sideways direction now. The move is over. You missed it if you didn't get in November 1st. Okay, so this is not a good entry point for this stock right now. Again, we're talking about short-term trading. I have no idea about long-term investing on this. Let's see. Maybe you could have entered yesterday when it made a higher high than the previous candle and hoped it got up to 71. But it's not my favorite spot right now. You know, having said that, I still want to expect to see oils and commodities and metals, including Freeport-McMoRan, to go up. And we're seeing the same sort of thing with Freeport-McMoRan. Okay, look at this. This is a gap up today. Interesting. It's not on heavy volume, though. See the volume there? It's actually low volume. So what's it doing intraday? We got to see. It's higher than yesterday, but I don't know if it's going to follow through to the upside. I want to see the heavy volume to confirm. This means that the big boys are not loading in with big money at these prices. At least not yet.
Interesting.
Based on fundamental analysis, which is your favorite long-term stock? Since we're doing short-term trading, I haven't been looking too much at long-term, especially while the market is trending down. At least some of the stocks are. So I don't really have an answer for that right now. Okay, we're doing short-term stuff. That's really all I have for now, Ben.
Yeah, that was good. I had to step away for a minute, but it sounds like you covered a lot.
Covered a lot.
I appreciate your time, and I know everybody else here does. So thank you. Thank you, Greg. As always, as soon as it's over, you can watch it on, if you didn't catch it all, the recording will pop up on YouTube as soon as we end this call. So if you have any questions, you can email Greg directly at greg@thetradersplan.com or options@thetradersplan.com. Anything related to the weekly income system or something from Steve's side, you can email me at support@thetradersplan.com. And I hope everybody has a great week. Happy trading. And thanks again, Greg.
Okay, you bet. Thanks, everyone. Have a great week.
There you go.